Good morning, good morning. How's everyone doing today? Glad to see you. Happy Thanksgiving to all my American friends. Hope you guys are going to enjoy the day with family and friends. Hope it's going to be a good one for you. And those who are not celebrating, welcome. We are going to spend some time taking a look at the markets. I know that the stock market is closed today for Thanksgiving, but that's quite all right. We can still take a look at it and see what is taking place with that. So thanks for joining me today and showing the dedication. Even if you're in the States and you've got family in the other room and you snuck away just to get some time on the charts, good for you. So hope you guys are doing well. If there's any charts that you guys like to take a look at, please type them in to the chat and I'll definitely have a look at them, and then we will apply the Sherlock analysis process onto the chart and determine what is taking place. Otherwise, we'll start by taking a look at gold and oil and seeing what is taking place here. I was looking at gold here and looking at the positions held by the institutions. And we can see that, yes, they've been adding to their long positions, but they've reached a point where they can't add much more. So we're going to be seeing some profit taking here. All right. So if we go through the data, November 16, the last set of data that was released, we had 360,000. Okay, that's aggressive. Okay, 360,000. So just out of curiosity's sake, how would you guys like to look at the last time the institutions were that aggressive with long positions? Okay, so the last time was somewhat in around the beginning of 2021. Okay, so we can open this up, beginning of 2021, and that was up here. Okay, right here. So 2021, that's where they were. 349,000 long positions and 70,000 short positions. And look what happened with price. Okay, where are we at now? We're at 360,000 and 100,000 in shorts. Okay, so that's a perfect example. When they reach areas in their positioning that we consider to be aggressive, and we consider them to be aggressive because we've got the color coding system on the template, which is allowing us to see when they are going, more aggressive with their positions. Okay. And what we know by studying the historical charts is when the institutions get very aggressive with their long positions, they have to take profits, and profits fuel moves. So look at the aggressiveness of this move. All right, you see that? You see how aggressive this move was and how aggressive their long positions were? Okay. All right. So now let's go back and take a look at some more data and scroll through and see what other times they've been extremely long. So July 2020. July 2020. Okay, right here. Okay, was the last time, and look what ended up happening. Okay, that initial thrust to the downside. And let's look at one more time. Going back in time, look at that, February 18, 2020. February 18. Okay, that was right up here after a massive rally. And then what happened? Big drop to the downside. Okay, so this is what I'm talking about. Every time the institutions are heavily long with their positioning, we see massive push to the downside. Okay, so when I look at the data, I'm seeing a few things. Not only am I seeing the fact that their long positions are 360,000 and maximum is 408, but I'm also looking at total size here. Okay, where we have 461 and maximum was 463. So that means the total amount of positions, taking into consideration longs and shorts, are reaching a size that is near an all-time high for them. Okay, 360,000 and then shorts being 100,000. When we looked at the previous data, that last time it was 80,000 shorts and 330,000. Now we have 461 total. So this tells me one of these two have to take profits. Okay? And considering what we're seeing on the charts, it's likely going to be the long positions, and that's going to fuel the move to the downside. So same thing with the Aussie. We were looking at the Aussie. Remember when price was back here in August? We were doing the analysis of the data. And what did we see? We saw that their short positions, 117,000, was an all-time high for short positions. And that came in August, all right? That came in August. And so if we take a look at where price was, it was here. All-time high with short positions. And so considering the fact that they were all-time high with short positions, we knew that there was a very good likelihood that they were going to take profits on shorts. And that was going to fuel a move to the upside. All right? That's what we were talking about. And so you see the move here. They took profits on shorts, and look what took place. All right? So what does that tell us? That tells us that this move to the upside was not fueled by institutional buying. All right? Because we were watching for that. We were watching to see if the banks were going to start buying from this area here, because this was an institutional area of demand. Okay? But, you know, when we applied the Sherlock analysis process over to this area of demand, we discovered that it's not of high quality. Okay? Meaning that in the overall scheme of things, okay, in the overall story of price, this demand zone was unlikely to be used to facilitate a move higher. Okay? And so if that is the logical conclusion that you come to, then the next logical conclusion is that if it's not going to be used to fuel a move to the upside, and we have supporting evidence of that, which is the fact that they were closing short positions, which fueled the move to the upside, not adding long positions, then the next logical conclusion is that this area will break through and price will drop like that. Okay? That's the conclusion that we came to. And, you know, the interesting thing is that, you know, when we do this analysis, we always needed to be backed up by other points of data. Okay? And so this is a wonderful addition to the evidence that we've collected so far, is the fact that retail traders are mostly long. Okay? Because we know that they're almost always on the opposite side of where the institutions are going to push price. So if the institutions are going short, somehow retail traders are going to be lured to go in long. And that's what's happening here. Okay? Retail traders are long, institutions are pushing it down. And so like I said, you know, we typically see a correlation between the Aussie and gold. Right? So if we're going to see a big push lower with the Aussie, then we're likely going to see a push lower with gold. Okay. So let's take a look now. Let's bring something up here, and I want you to see something else. Okay. What do you see here? Okay, you seeing something similar? What do we got here? what we got is, you see the marks that I left up here on the chart here. Okay, here's the Aussie. Okay, look at my marks, the X and the downward arrow. And now I'm going to switch over to gold. Okay, so you see the same thing happening. You see that the majority of traders are in long gold, just like they are in long Aussie. And if we apply these marks over to the gold chart, this is a very likely scenario in the weeks to come. Okay, very likely scenario. Now, when we look at gold, the dynamics of the chart are a bit different than what we have with the Aussie, because on the chart here we have clear upward trends. But one of the things that leads us to believe that there's going to be a drop in price is the 1, 2, 3 multiple tests of this area of demand, which, when we've studied the charts in the past, we know one thing to be true. When a zone gets contacted this many times in this manner, it typically leads to the zone being taken out. And so when you combine that with what we see with the data and what history tells us, it's a clear indication that, it's very likely that we're going to be seeing a big drop. I mean, when the institutions have already maxed out on their positions, what's left to do? Okay, just think logically about this. Okay, let's say you have a budget where you can only buy so much gold, right? You only have $100,000. You can only buy so much gold. So let's say you've already spent $95,000 on gold, right? What are you going to do? There's not much more for you to buy. So at some point you got to take profits on those positions, right? So when you take profits on those positions, what do you need? You need people to take those positions off of you. So if you're supplying the market with more selling, with more supply than there is demand, then it causes price to drop. That's why every time the institutions have had their positions at max size, we see this spillover where it just starts to decline in price. So you take all of these factors together, and the conclusion is that price will drop. Okay? Logical, putting all the evidence together. We're not basing our decisions off of, what the television is saying, what the news is saying, what websites are saying. We're not paying attention to that. Okay? I never, ever, ever make any trading decisions based on any information that I collect besides from the CoT data, what the retail traders are doing, and what I see on the charts. Okay, I trust my own analysis, and the analysis never lets us down. Okay, we're not going to be right all the time. We can't be. There's no such thing as being right all the time. But when you consider what the majority of traders are when they do their analysis, we are way ahead of the game. Okay, so now we take a look at oil, and we have some trade signals here on this one. Okay, we have some trade signals on oil, and so I've laid that out, and I posted it in the forum yesterday under the watch list, that there's a very specific thing that we're watching for on the charts. And so let's take a look here if we can see anything in the data that would suggest what we are suspecting will happen. Okay, so first things first. So we've been talking about a rally in oil for how long? Okay, how long? When we take a look at this monthly chart, okay, so if you guys have been with us for long enough, you know that there was a signal here to go short. Either that point or this point, I can't remember. Might have been, yeah, I think it was this point here. Because when we were examining the markets and taking a look at what the institutions were doing, we knew that there was a very good likelihood that they were going to be dropping price. Okay, did I see this coming? No. this drop below zero? No, nobody saw. I don't think anybody saw that coming. That was just totally out of nowhere. But we had a signal to get in short. We had a signal that the chart was going to move to the downside. We had targets down there as well. And then we did a session where I spoke about this area here, okay, in the $20 range. And I laid out something very specific about what we needed to see happen. And it's exactly what happened. I said, if this happens, price is going to go up quite significantly. And so it has, and we had our upward targets. And so if you read the dynamic of what's taking place here, okay, I'm completely 150% convinced. You know, this is 2020. Okay, so we know about what happened in 2020, and we know the news that was coming out, right? That there was going to not be so much need for oil, and that was what fueled this move to the downside. I think that the news was just used to propel price to the downside, and I think there were a lot of big interests that were being instructed to purchase oil here, okay? A lot of big interests, because you take a look at where we came from, okay, and where we are and what's happening in the world right now. We went from nobody needs oil, so it's super cheap, to it's so darn expensive and we can hardly, drive around, and food prices are going up. I mean, it's all fabricated, all created, all just a fabrication. And anybody who studies history and knows how to manipulate, how forces have manipulated the markets and manipulated the economies in the past, know that this is easily created. So if you know that this is what you're going to end up creating, right? Getting it as low as possible to let your friends get in at as cheap as possible for the rally up is just what happens, okay? And so as price came down, it settled into here, okay? This is an institutional buying area, okay? This is an area that we had mapped out for a long time, way before price ever got down here, okay? Which just goes to show you how fabricated and preconceived everything is, all right? We're made to believe, when you watch the news, we're made to believe that things happen on a whim. And they happen because of current events, okay? Price is going down because of what's happening in the world. Oh, we have this situation in the world that's terrible, and this is why price is going down, all right? But the thing that you'll notice when you study the markets the way that we do is that the institutions, the big players, the world's largest banks, these people have created a map of price, okay? There's like a map of what is to be expected of price. It's a multi-year map, and price responds to these key areas that we locate like magic, okay? That's the reason why, it's one of the reasons why I gave myself the name Magic Traders, because number one, I've always been into magic, studied magic since I was a young kid, learned a lot through studying magic, learned a lot, okay, about human psychology, about misdirection, about tricking people's minds, about putting a lot of effort into learning one little thing so that when it comes time to perform, you can present things like miracles. And then when I got into this methodology of the Sherlock system, it was just incredible how price was reacting to these areas that we were locating on the charts. And it was as if by magic, price was responding exactly as we had forecasted that it would be. And so, the more you study the charts, the more you come to realize it's not magic. What's basically happening is, if I could illustrate it for you in a simple way, it would be, you have price, you have price down on the charts. Okay? Here's price right here. Price is here, okay? And the way it moves up or down is if the institutions come in and they buy. They flood the market with buying, okay? And because they have extreme power, meaning they're dealing in trillions of dollars, okay? Whatever's required, okay? Whatever's required to move the markets is what is going to be used. But they have trillions of dollars at their disposal. So if they want price to get from here to up here, they can do it easily. They just have to be buying, okay? But in order for them to be buying, there has to be somebody selling, all right? So that's why you have the media and you have so-called experts that come out on the media and the news, because if you didn't have these avenues to use to get people to make trading decisions, how would you convince people to sell something to you? In order to convince somebody to sell something to you, you'd have to convince them that it's a good idea to sell something to you. And so you'd have to make them think that price is going to go lower, right? So if you can buy from somebody who's selling at this point, okay, what happens is when they come in and they sell or they buy at this area, price goes up, okay? And then at times what they'll do is they'll cause price to stop and then eventually go higher, all right? And what ends up happening is they end up creating areas that we call buying zones, demand zones, whatever you want to call it. But these areas, as price increases, are substantial. And it doesn't matter what year these areas are created. It makes no difference. They could have been created 5 minutes ago, 10 hours ago, a year ago, 20 years ago, or 50 years ago. It makes no difference when they were created. That's the magic of what we're doing, because logically you would think that if an area of institutional buying took place 20 years ago, why would they care when price comes back to that same price point to be buying again? Why would they care? Okay? Logically, you'd think they wouldn't care, because what happened 20 years ago happened 20 years ago, and it doesn't make a difference to today. But we are so lucky that that is not how it works, okay? Because I'll tell you something. You know, I can study a 4-hour chart, and I can go back, 15 years and locate a small area of buying that took place on a 4-hour chart. And today, when price interacts with that area, it actually provides us with incredible amount of information. It can provide you with an entry point, okay? Or it can provide you with an area that needs to be watched for, because when it's removed, it will trigger a chart signal, okay, to trade. And so why it's like this, I don't know exactly why. I wish I knew the exact reasons why. Is it because of the algorithms? Probably, if I had to think about it. These key areas that are buying and selling by the banks, somehow these key areas are programmed into their algorithms. Okay? And so when price comes back to these areas, the algorithms remember that these areas were areas where the institutions were interested in buying and selling, and price reacts from them. All right? It's like magic. It's unbelievable. Okay? So when we look at this chart, oil, like I was saying, we knew that if something specific happened here, it was going to trigger price to move to the upside. Why? Because this was a buying zone. Okay? And it was created a long time ago. And yet, we still knew that if price settled in this area, that the buying was going to begin. Okay? So that's what happened. Buying came into the market, and then we have this trend line. Okay? This trend line is what was dictating this momentum to the downside. Okay? And what do we talk about all the time? About watching for that shift from downward momentum to upward momentum. And so you see now what has happened here. Okay? Now you see what has happened. This is a big move. This is a big shift. Okay? This was always in the works. I can tell you that right now. Okay? Like I was saying, you may think that the only reason why oil is high right now is because of world events. And I'm telling you that's not how it works. I'm telling you that the price of oil has already been dictated a long time ago. What was going to happen with oil was already orchestrated years ago. Okay? That's how this works. How do we know this? Well, this is something that we talk about in level 3 about sequencing. Okay? When you understand the sequences of the markets and what is to be expected from each time frame, you can see that there is a pattern of how price plays out, of how what happens on one time frame leads to something happening on the next time frame. And so we can forecast price years in advance of where we expect price to go and how it's going to play out on those time frames until it gets to those targets. How would we be able to know that if it wasn't already pre-planned? Okay? That's why I can tell you that if anybody ever tells you that, the market is completely random and that nobody knows where it's going to go, that is not true. That may be true for that person's experience, but that is not true. That is not what we have discovered by studying the markets. And anybody who's a student of ours knows that. So this move up was already pre-orchestrated. This was part of the agenda. This was what was going to happen with price. It's just that they will use the media to help facilitate this move, or to help facilitate the move by triggering retail traders to do the opposite of what the banks need them to do, or of what the banks are doing, I should say. Okay? So this move up was pre-orchestrated. It was part of the agenda the whole time. And so you see this dynamic shifting from down here to up here, okay? And it was all along, always in here, right? So look at long positions. Back in March 31st, okay? Look at early February, okay? Look at the end of 2019. Look at mid 2019. Okay, 500,000. The end of 2019, the top portion of 500,000 now entering into 630,000. Okay, 2020 March, 700,000. April 14, 2020. Okay, April 14, right at the lows of price. April. Look what they were doing. Slamming in with the long positions. Okay, look at that. 700,000, 736,000. All right, that's where they were getting in long, right at the very lows of price. How many big time traders do you think were given the heads up on that one? How many investment banks were given the heads up on that one? How many retail traders were freaking out and selling their long positions to them? You think that big spike to the downside was enough to scare the bejesus out of people to get out of their positions? I think so. Okay, so now we see they rallied price up. They took some profits. They added some. They took some profits. They added some. Now we're at 510,000. Okay, it's a decent size. Maximum size for oil is 866,000. And look how cooled off shorts have become. Okay, the last few weeks we've seen them cooled off with their short positions, which means they're not focused on shorting right now. Look at long exposure, 84%. That's pretty amazing. That's pretty aggressive. 84% long exposure. Okay, and very cooled off with their short positions. So we're seeing nothing but more upside on this one. There's no reason not to see more upside. Okay, and you think it helps to put the price of oil up when you've got the U.S. administration doing everything in their power to shut down oil production and pipelines? Okay, you think that was not known down here? That was going to be part of the plan? But how interesting is it that, we had price here early 2019, and by reading the charts, we determined that price was going to drop, okay, down to this area, because that's what the charts were saying, that this is what the banks are making moves for and what they're setting up for. And this is before Biden came into office, before the world events that have taken place over the last couple years. All right, all set up, all pre-done before everything happens. Okay, then Biden comes into office, and then his policies, anti-oil, anti-gas. But again, this move was going to happen anyways. Okay. So, so we have targets higher, 92. All right, we have targets up there because when price gets up there, we'll probably see a reaction to the downside somewhere from here. Could be even higher up. All right, and then what's going to happen from there? We'll wait for the signals when price gets up there. It's hard to say. It can go all the way up to 100 before we see it let off. Okay, so if you are worried about gasoline prices, I would be too, because I don't see how this is going to let up. Okay, and when it comes to the US CAD, we are seeing some major strength that's about to kick in, right? And the Canadian dollar and oil are usually in line with each other. So I'd be on watch for that. All right. Was there any markets you guys want to take a look at? Does that make sense? Gold and oil, what we were looking at. Do you understand now why we are seeing what we are seeing? And the dollar, there's no stopping the dollar. There's no stopping the dollar from rallying higher. And I don't understand why everybody's saying the dollar's overpriced. I mean, who cares? When did that ever matter? When you're thinking too much about something being out of value, nobody cares. It doesn't make any difference whether it's out of value or not. What matters is, are the banks buying it or they're not buying it? Look at the dollar. Remember, we had contract expiration September 14th. Have they been buying or selling the dollar? It's been clear. They are buying. All right? And short positions are cooled off. They don't even care about shorts. They could care less about shorts. They're not even focused on shorts. It's all long. So we have targets at the 99.47 area, and then we'll be contacting some supply, and then we suspect that there'll probably be a push to the downside. That's where it's going to let up there somewhere. Okay. Yeah, so there's no stopping this one. No stopping it at all. Okay. One of the most incredible things was, I think it was on the weekly chart as well, if I'm not mistaken. Let me see. Yeah. Okay. Yeah, right here. We had an area of supply being formed back in 2002. 2002. And that area of supply was here, marked off by this line that I have across on my charts. Was created in 2002. So just to show you the power of what we're doing here, we're in 2016, and look at what happened when price contacted that area of supply. Okay? You see what I'm talking about? Price contacts the area of supply, and then massive drop. And that area of supply was formed in 2002. 14 years later, price comes up to that area and reacts, right? Which goes to show you it doesn't matter what date these areas are created. When price comes into them, you're going to see reactions. It's just incredible how it works, but that's how it works. And when I discovered that that's consistently how it works, I couldn't tell you how thankful I was that it worked that way. Because now it really could put the odds in our favor that price was going to be able to be predictable. Let's go over to the stock market. S&P 500. Let's look at the futures here. Still ticking away. So it's just a little bit of consolidation over the last few days. Not much there. Reacted to some demand that we have here on the charts. Just fell short of it. Moved up to the upside. And then on the 4-hour chart, it removed some demand. So does it drop lower and hit demand? Does it continue from here? Well, we have to wait now. We have to wait. US 30, Dow Jones. This one, we were talking about this the other day. It shifted momentum to the downside. And if momentum continues, we expect this to be removed and then come down to this lower area, okay, to potentially re-engage with the weekly trend that we have here. Okay, but we're watching that one to see how that will play out. So, as I was mentioning on our session that we did on Tuesday, there's good indication that we're going to see some weakness in the overall markets, short term before longer term momentum to the upside again. And Nasdaq is pretty similar. It's already contacted this area of demand on the daily chart, so if it comes back, it could drop a little bit further. So we'll see. It's hard to tell at this point. Some of the stocks that I really like, Apple, for sure. What's there not to like about this one? It's heavily supported with big financial money. Big financial money. Price came down to the 4-hour area of demand, starting to retrace up. So it's like what we always say, okay? You got to locate the trends. Trend to the upside, trend to the upside, trend to the upside, trend to the upside. All 4 charts, trend to the upside, okay? So you got a green light to go long based off of this chart. You got a green light to go long based off of this chart. You got a green light to go long based off of this chart. And you got a green light to go long based off of this chart. So because the 4-hour chart is the smallest time frame out of all of them, it's the one that you base trades off of first. So we locate areas of demand like here, and those are areas of buying. If that area fails, you go to the daily chart, locate areas of demand, and you buy. If that chart fails, locate areas of buying on weekly chart and buy there, and so forth. One of them is going to stick. Okay, when there's no reason for price to be dropping, then the 4-hour chart demand will stick, will work. That demand will work. If the market's a little bit weaker and it's showing that it wants to retrace a little bit further, then the daily chart will work. If the daily structure on the overall markets broke, then we got to focus on the weekly chart. Right? And so forth. That's how it works. All right? That big pullback that we had earlier in the year, March. Let's take a look at the weekly chart. March 2020, that big pullback in price, major pullback in price, gave a great opportunity for institutions to get in, and that's definitely what they did. Okay, so we're going to do a little bit of analysis here really quickly, and I'm going to take a look at what's taking place here. So we have that, that. Okay. So we had some institutional buying here. Down here. And on the daily chart, this is what it looked like. Right here. This is what it looked like here. This drop in price. And it looks like, oh wow, this is beautiful. Beautiful, beautiful, beautiful. Yeah. So let me show you something here. Okay? Let me show you something here. Let's just draw in a few things. This is Apple going back some time. I'm going to draw in a couple trend lines here. Drawing some areas that I'm just spotting with my eyes. Not going to go into details of how I'm locating these things, but we're locating the supply and demand created by the banks. Okay, this is what I'm doing right now. I'm locating the supply and demand created by the banks. All right. Here's a key area up here, as well as up here. Two key areas of selling by the banks up here. Okay. So this was back in 2018, before the push to the downside. And two areas of supply were created by the banks. Okay, I'm going to show you. This is 2018, all right, on Apple stock. So we had a push to the downside. And let's move forward and see what took place. I'm going to stretch out these areas of selling going across. Okay, now do you see what happened when price came into this area of selling? What happened with price? You see how it moved downwards like that? Okay? That's a key area of selling right here. And when price came into that key area of selling, they sold. Just like they did in the past. What they did in the past, they will do it again. Alright? What's that famous saying? If you don't learn from the past, you're doomed to repeat it. Well, yeah, history repeats, okay, is what I'm telling you. History repeats. What they do in the past, they do it again, right? Now, one thing that we learn by studying the charts is that when you get an area of supply and it's quickly tested like this, it also becomes extremely important. And what happened when price came into this area of selling? It dropped. Okay? So now let's look at the overall dynamic of what we have here so you can see what's going on here. All right, so This was the very high of price in 2018. The very high of price, and then we got a significant drop leading down into December. Okay. So this was the very high of price, all of this. Then we had a significant drop. Okay. The key areas of supply that were created by the banks, because before there's a massive drop in the markets, who do you think knows that this drop is going to take place? And remember, everything is pre-planned. There is no such thing as, oh, this just happened out of nowhere. Nobody knew that this was coming, so we're just reacting accordingly, but nobody knew that this was going to happen. There's no such thing as that. Okay? Everything is pre-planned. Whether you want to believe it or not, that's a different story. If it's outside of your realm of belief, that's your deal. But I'm telling you what we know to be true. All right? If you don't want to believe it, that's fine. The market doesn't care if you believe it or not. If you believe it, you'll start to see it. If you don't believe it, you'll be blind to it. It's just simple as that. Okay? So the institutions were up here. Okay? The big banks, they were the ones that were coming in and selling. And the banks are the ones that control price. They are the ones that move price down or move price up. Period. All right? So their area that they create, their key areas of buying and selling, play significant roles. The thing is, you have to determine how significant these roles are. And what is their significance? These areas where they're buying and selling, what are the significance of these areas? So these areas playing a very crucial role in the move to the downside. When price eventually gets back up there, they're going to play a very crucial role. Very crucial role. Okay? So this area here is an area of selling. So the algorithms are programmed. This is a key area here. When it gets up there, guess what? Price drops. And then it's programmed to start pushing upwards. All right? And when it pushes upwards, what happens is they program the algorithms to remove those key areas and bring in areas of buying. Okay? And so now take a look. Price comes in, sits at this area, comes back to the area of buying from the banks, and look what happens. Okay? Do you see that? And people will tell you, you can't know what's going to happen in the markets. Really? You can't know? You mean you couldn't find this area? I could. My students could. Your average person can't because they have no clue what they're looking at. No clue. Absolutely no clue. They don't understand. Why would somebody be looking for rhyme and reason in the markets when they're constantly being told, and their brain has been programmed to believe, that the markets move randomly based on world events and economic events that are unforeseen? They just happen out of the blue and the market just reacts to them. If you believe that, then how could you be looking for rhyme or reason in the markets? You wouldn't be. How could you be looking for, price action moving in a predictable fashion? You wouldn't be. You wouldn't even realize that this has all been already pre-planned. I mean, you're talking about trillions of dollars. It takes months to engage in the markets when you have that much money. To move money in and out takes a long time. They have to spread orders over a long period of time. If they always react to economic events as they took place, they would never be able to position themselves accordingly. Just when they finally got into a position, some world economic event would happen and they'd be like, oops, oil's not going to continue higher. Now we got to get out. And then them getting out so quickly would force the market lower. You know what I mean? Like, it's just not possible for them to do it. So they have to get in and out over a long period of time. So you have to understand what is to be expected, or what is going to be created in order to take advantage of the markets when you have that much that you're managing. Okay, so all pre-done, completely predictable, completely forecastable, And this is how we do it. All right. So you see how it came down here? It's like magic. Located an institutional area of buying. That was extremely important. It plays a very significant role. How do we know that? Because these two areas played a very significant role. How do we know that? Because we're able to locate them. We're able to read the charts and locate these areas. So when price comes down, away she goes. All right. So what was I just mentioning about an area, a zone that gets lightly tested? They play significant roles in the market. They're very, very powerful, these zones. Very powerful. Okay. And so let me show you something. Let's take a look and replay it from here and see what happens. Okay. So we have price coming down to the area of buying from the banks, and then they take off. Okay. They take price off. So let's just draw this demand zone like that in green. All right. They shoot price up. Now we're into late 2019. Now we're approaching December 2019, all-time highs. And now they know something big is going to happen in the world that's going to drop this market hard. So they take it as high as possible, and then when they're ready, they collapse it. And they know that the media is going to help them in that. They know that, okay? And so here comes the weakness. Here comes the selling from the banks. Remember that key area that I pointed out there, okay? Here comes the major selling. Look at that. Everybody freaking out. A fake bounce to the upside to lure people into getting long. Take a look at that. Are you seeing this? Okay. Are you seeing this? Is that random to you? Is that random? Is that the market moves in random ways that we can never understand? Or is that, has that been created? Or is there rhyme and reason to why it's doing what it's doing? You remember what I just explained here? The dynamic of the all-time highs here, of the key areas of selling that forced the markets lower. That's the key area of selling that forced the markets lower from all-time highs. What happened when price came back up to that area? Selling from the banks. And then what happens when this area is removed? Institutional buying takes place. Major institutional buying. So where did all the banks come in with major buying to push the markets up? Where did they come in? Right here. Okay? That is where they come in with major buying. Right there. And they force price up to here. Who do you think is taking profits up there? Exactly. The banks are taking profits up there. They get in here. They take profits here. All right? So then there's the big economic event. They offload all their positions to everybody else who, by this time up here, there's nothing but good news about the markets, all-time highs. It's the best, right? The administration, the U.S. administration, all-time highs. We're the best. We're creating jobs, right? Everybody's so happy. How many people do you think were convinced by that administration that they should get into the stock market? Think about it. Trustworthy president, right? Doing some good stuff. Unemployment rates are low. Bringing back the jobs. Doing so well for America. So good, right? You're like, wow, America's reborn. I feel like I could feel confidence in the States again. Let me get back in. Let me start investing in companies. Let me start investing in stocks. Let me start supporting this country because we've got great support from the president, and this is going to just continue up higher. Right? So, is that not what you need for the banks to exit their positions? Is people to come in and get those positions off of them? Right? So interesting how that works, right? We know for a fact that the banks are buying down here. I can tell you for a fact. I'm not guessing. I know it for a fact. I can see it. Okay? So the banks were buying down here. They took price all the way up here. And all throughout here, what was happening? Support, 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 all-time highs. Lots of support from the government. Lots of good news. The news coming out with all this news about, the economy stabilizing, unemployment rates going down. So much good news for the country. So as everybody's coming in to buy, they're buying from the banks who are selling. Why do you think they're selling? Well, we know why. When we look at the stocks, okay, when we look at the pharmaceutical stocks, the airline stocks, Amazon, Netflix, okay, all these big corporations that made a killing at the beginning of 2020 because of lockdown, when we look at them, we could see the major institutional purchasing before anything took place, before any massive news about lockdowns and stuff like that, okay? It happened before, okay? So what is that telling you, all right? We know for a fact that before major decisions are made, it's already known what's going to happen. It's already known what's going to happen. This is how the world works. This is how the market works, all right? And so I'm laying it all out for you right here. So this is Apple, okay? This is Apple shares. Banks were coming in, pushing price to the upside. Everybody now wants to support the economy, okay? This map and S&P 500, they're all the same, right? Apple takes up so much of the S&P. It's pretty much the same how Apple is moving and the market. But this just goes to show you what's happening here, okay? So banks come in and buy, support it, push up, and then everybody's like, maybe I should support the markets. Start buying, they take profits, look where it drops to. You think it's a coincidence that it drops exactly to the same spot where the banks are buying? If you bought something at a really, really good deal, and then a year later you sold it at a really high price, and then it started dropping in price, where would you want to consider buying it again? Probably at the same price that you bought it last time before it went up massively, right? Probably, maybe. Institutional buying areas, yeah. Who else is looking at those institutional buying areas? Nobody, okay? Because nobody knows how to locate them. All right? But you see the power in locating them, okay? So, what happened after that? What happened after they started buying from their buying area? What happened to price? You look for yourself and see. I'm not making this stuff up. This is how it works. This is how the market works. And people don't know that. People have no clue of that, okay? So let's pause it there. I'll show you something else. Okay? I'll show you something else. So when price was coming up here, this is the institutional buying area, right? Where price came down and the banks started buying. So this is the banks buying and pushing price up. Now eventually they're going to take some profits, they're going to let price drop, and then they're going to push up again. That's what they do. They push up, they take some profits, they let it drop a little bit, and then they push back up again. So when they take some profits and they let price settle, they come in with more buying. So it's our job to locate those new areas of buying that they're coming in to do, okay? Because we need to know those areas. Why do we need to know those areas? Well, because remember what I was saying. If you bought something at a good price and a year later you sold it at a very high price, where would you be interested in buying it again, right? If you were collecting rare coins and they went up in value from $100 to $200 and you originally bought them at 100, as they're going up, if you still see reason to believe that the coin market, the rare coin market's going to go up in value, especially if you control the media and the media keeps on telling everybody that the rare coin market is going to continue going up, and so they're going to buy it, then you'd buy some at $100, you'd buy some at $125, you'd buy some at $150, right? That's what you do. You'd buy some at 100, you'd buy some at 125, you'd buy some at 150, and at 200 you'd sell. Okay? Especially when you know the media is going to come in and say, no, it's not worth $200 anymore, folks. Okay? And then that will fuel a move to the downside. After you've gotten out and after you position yourself to take advantage of a massive drop. So as price drops, what has to contact? Those levels that you were interested in buying in the past. You were interested at buying at 150, so what about now? Are you interested in buying at 150? If not, it goes down to 125. Are you interested in buying at 125? If not, it goes back down to 100. If you're interested at buying at 100, guess what? It comes back to these key areas again. Now we're coming up to the 125 area. If you weren't interested at buying something at 125, then what were you interested in doing? Think about it logically. If you're not interested in buying something at $125, that means you were interested at selling something at $125. Okay? And when you pass that and go up to 150, if you weren't interested at buying something at $150, what were you interested in doing? Selling something at $150. The market works the same way. Okay? So let me explain. So the market was interested in buying things over here. Okay? As price was going up, this was another area where the banks were interested in buying. So the banks were interested in buying here, the banks were interested in buying here. Okay? Which is the reason why price went up. And then retraced to the buying area, went up, retraced to the buying area, and continued going up. So just like these key levels here, 100, 125, 150, 200, the bank has key levels that they're interested in. And if they're not interested at buying at those levels, then they're interested at selling at those levels. Okay? So what happens when price comes down to that area? That was the first key area where they started buying again. Okay? First key area. That's like midway through, right? So that's like how people say, oh, you draw a Fibonacci level and it was a 50% retracement. No, it's not a 50% retracement. It's a retracement to an area of buying at a key level. That's what it is. Okay? It's institutional buying. If you don't know how to locate the institutional buying, it could be at the 25% level, 35% level, 45% level, 50% level, 65% level. You'll never know. Okay? You need to find the areas of buying and selling from the banks. That's what you need to do. Okay? So look what happened when price drops. Price drops to that area, and look what happens. It responds, and it rallies up. Okay? So they were interested in buying at this level here. They were interested. How do we know that? Well, because they were buying at this level. So price goes up. But what happens again? Price eventually comes out and removes the area. Okay? Eventually, they are not interested at buying at that level anymore. They're interested at selling. They're interested in selling. So that area is not important anymore. So now it is our job to locate where did they make the decision to sell. And I can locate it as simply and as quickly as that. Okay? So now we have an area where the banks were interested in selling to push price down to here where they had their buying. Okay. So now price is coming back up. Now it's working its way up. First, we made our way up from 100 to 125, 150 to 200. Then we made our way down 200, 250 to 125 to 100. Now we're slowly making our way back up again. And as we go up, remember, what used to be the buying areas now become the selling areas. So on the way up, what used to be the selling areas are now going to become the buying areas. All right? So let's take a look at what we have here. As price is rallying up right through here, look at this, look at this, look at this, look at this, look at this. Oh, we're entering in the selling area. What do the banks want to do? Take it out. And look what happens. They remove the selling area because they're no longer interested in selling. They're interested in buying. So what do they create? They create a buying area. And just like magic, look what happens. They create a buying area. They drop back into the buying zone. And away she goes. You see? From 100 to 125, up to 150, back up to 200. Areas of buying on the way up, areas of selling on the way down, areas of buying on the way up. Okay? So you see how that works? You see how that is all, it all makes complete sense. It's all there before it even happens, way in advance. These zones are created, and their role is very significant, even though the role that they played 3 years ago was to advance price, but presently the role is to provide us an area where we can locate selling. And then 5 months down the road, that area of selling provides us with the area where the institutions are going to be buying, and so on and so forth. This is just a repeatable thing over and over and over again. And like I said, thank God for this, because if it wasn't for this, how would we ever know how to know where the markets were going to go? Okay, so you see that? You see how price came down to that area, and this was the key area where price reversed from. Zoop, and boom. Okay? And then people tell you, nobody can know where the markets are going to go. Anybody tells you nobody can, that they know where the markets are going to go, they're full of it. Yeah? Okay. Continue believing that. That's your belief. Continue believing that. Okay? Do you think right here, this was the all-time highs here? Okay? So what do you think we have located on the charts here? Institutional buying. Because who do you think took price to all-time highs? Me and you? No. The big institutions did. Okay? What do you think we have here? Institutional buying. Because who do you think took price to all-time highs? Do you think me and you did that? No. So what happened when price came up here? It dropped back down into institutional buying area and continued higher. Yeah. If anybody tells you they know what price is going to do, they're full of it. Oh yeah. Okay. So now this is the situation. It went even higher after more buying from the banks. Okay. Could we have spotted this? Yes, we could have. Okay. Look, all the buying. These are all the buying areas. Okay. Buying areas and buying areas. Is it that difficult to do? I don't think so. You just have to know where to locate the areas. You just have to know what is taking place and how to locate the buying areas from the banks. That's it. That's all it comes down to. It's not rocket science. But you have to understand that the markets aren't random, that the markets don't just move on a whim. It's not how the markets work. So now we see a little bit of a sell-off, push back upwards. Now we're into 2020. Look at how high. Look at how high from back here. You know, Apple was $53 at a buying area. You think the banks did well? Who do you think's buying here? Who do you think's buying Apple at $53, $54? Why do you think these big drops happen? It's to transfer wealth. This is a transfer of wealth from those that are not in the know to those that are in the know. Okay? They build up an economy so that people do well. They make it so that people can make money, but then they build up the media to present this image that the country is doing so well, so everybody invests their hard-earned money. Okay, think about it. Think about it. How do you take money from somebody? Okay, you can just go into their account and take it, but then you'll be tracked and traced. You can break into their house and take it, but you have to know their hiding areas. If you do, find their hiding areas. Or how about somebody works hard in a job, makes $100,000 a year. Out of that 100K, I mean, think about this. Out of that 100K somebody makes in a job, right? A portion of that goes to taxes. Okay, so let's say 40,000 of that goes to taxes. You're left with 60K. Okay, let's say out of that 60K you invest 10K into Apple up here. Why? Because the world is doing well. Everything is hot. The media is saying, go, go, go. Make America great again. Big rallies. You know, big news coming out from Apple. Everybody's like, boom, 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 boom. Everybody's charged up. Woo-hoo! This is going to go up. Sweetheart, we're doing well. I'm going to take my 10K, going to invest it in this market. Yeah. Going to buy some Apple shares at 80K. We're going to do well. This is going to skyrocket. So you turned your 10K into Apple shares, right? What happens by the time it gets to 50K? Your 10K is now worth what? 6K? This is after taxes. Your 10K is now worth 6K. If you even held that long. You probably didn't. Okay? So now the banks, they sold you something that they bought at 6K. They could have spent $6,000 to buy those same shares that you bought at 10K. They spent $6,000 to buy it. They sold it to you for 10K. So they basically just took your $10,000 that you worked you had to make 100K on. You spent 40K of that in taxes, and then you're left with 10K. You buy shares of something at 10K. They take your money, and they're like, "Woohoo! Yeah, we just bought this at 6,000. We sold to you for 10, and we're just about to drop this value to bring it back to 6 so we can shake you out." Basically, they just went into your account and took your money. You see how they did that? You see how they stole from you? You see how it's another way of stealing from you, but legitimate? Why? Because they didn't force you, didn't put a gun to your head and told you, hey, stick them up, pass me your wallet. They didn't do that. They used a more cunning method. They got into your mind. And they convinced you that if you made these decisions, you were going to make money. That's what they did. And it wasn't just them that said it. It's not just their talking head pieces. It's everybody saying it. Because when it's all in the news and it's in all the TV programs and it's everywhere, you know, you're so convinced that, well, it's not just one guy saying that the markets are hot. It's the president saying it. It's all the media companies. It's the news. It's my buddy down the street. Everybody's telling me now's the time. So, you know, what, this is a grand conspiracy to make it seem like the market is so good? Come on, man. That's the genius of how this plays out, of how it works. That's the genius of this. When you understand that, then you can take advantage of it and not fall prey to it. So now they just took your 10K. They robbed you of 10K. And as a condolence gift, they gave you some money back. So your 10K went down to 6K. So you got $4,000 stolen from you. in a short span of time. Okay, that's how they take money from you. It's a transfer of wealth. The market is a transfer of wealth from those that are not in the know to those that are in the know. From those that are using Bollinger Bands and support and resistance and indicators and all that stuff to those who actually move the markets and plan it out years in advance. Okay, so now look at where price is. 136, 140, right? Let's speed this up a little bit. Now we're into 2021, 140, passes it, goes back into areas of demand. Now we're getting a lot of ranging on the daily chart, May. And now we have the latest analysis, creating an upward trend. There we go. Breaking the initial trend line, coming up to new highs. So now you're along with the story of price. Now you see what's going on here, okay? Where's the latest area of buying? Here, on the daily chart. Okay? And on the weekly chart, latest area of buying by the institutions here. So you can see that very easily. That could happen. If the markets are in line for a move like that, that is what will happen. Okay. And if that breaks through, then 130s would be the next area that we'll be looking for buying at. Okay. But this is just getting started. This is just getting started. How do I know that? Well, because when I take this 6-month chart and I look at it, this is institutional buying taking place here. This is institutional buying at the 120s, 140s area. Okay? And you look at the dynamic of what's taking place here. And look, the distance from buying to buying. Okay? That's the distance. Buying to buying. Now, let's just apply that same distance here. And we got projections of over $200, or 215s, 220s. You know, when you take the proportions of the moves in class and you put it onto the chart like that, that's what we're looking at, 220s for Apple. And then some world event. And then eventually even higher. You think Apple's going to die anytime soon? You crazy? Apple's the greatest spying device ever created. They convinced everybody to carry it in their pocket with a microphone and camera to film and listen in on every conversation that they have. It's the greatest device known to man. They convinced everybody to hold a spying device everywhere that they go and to pay an incredible amount. They made it through slave labor, paid pennies for it, and then they charged us $500 to $1,000 for the spy device. It's the greatest thing ever. Greatest thing. And it's a radiation brain melting device as well. I mean, it's an all-in-one package. It spies on you and it numbs down your brain so that you can't think properly. It's great. So yeah, Apple's gonna shoot to the moon. There's no stopping this sucker. You just don't want to be buying it where they're trying to lure you in. You want to be buying it when they are buying it. Okay? All right, so good session. Let's see, Francesco, you have to leave, no problem. Another masterpiece from our professor. Thank you, Kevin. Thank you. Yeah, could you take a look at the ES we did? US 2000, same thing. Only thing is on the daily chart with the Russell, it took out demand, so the structure is not good. Also, the structure on the weekly chart is not good. Okay? Not good. Not good. You can't make trading decisions on these suckers. So the only chart that you can make trading decisions on is the monthly chart. But look how far down demand is. Is it going to drop there? I don't know. I'll tell you one thing. If the Russell ever gets down to that area, that would be an ideal spot to get in. I'm telling you right now. Ideal. Okay? Watch that. Mark your charts. Mark it up. Write it there on your charts. Kevin said this will be an ideal place if price ever gets down there. And watch it for yourself. Don't trust me. Like I said, don't trust what I say. Don't take what I say as gospel. Just make note of it and see it for yourself. You need to see it for yourself. I've been seeing this for years. So I know it like the back of my hand, and I know it to be true because I've seen it, okay? But you got to see it for yourself, all right? You got to mark it up and start seeing it for yourself, which is why I'm doing what I'm doing, which is why I'm showing you this, because until you see what it is that we're doing, until you see what's really happening in the market, you're not going to understand the value of what it is that we're doing at the school. Okay, when you see what's really happening in the market and how the market actually moves, then you'll start to see the value of what we're teaching. Okay, when you understand how the markets really move, then you can start to see the possibilities at your fingertips, because now you can think like the banks as opposed to thinking like the ones that are losing. Okay, all right, this was fun. I enjoyed it. Happy Thanksgiving again. I hope you all enjoy the rest of your day with family and friends. I had a great time sharing this information with you. And I'll get back to studying my charts and doing my work. And yeah, if you have any questions, send us a message. You can find our contact information on our website, www.whiteoakfx. If you wouldn't mind hitting the like button before we separate and go our own ways, I'd appreciate that. And yeah, wish you all the best. Wish you could go on forever. I feel smarter every time I attend one of these. Well, that's nice to hear. Do I need the pro package on TradingView for your course? No, we have videos that you can check out. All you got to do is create a free account. Once you create a free account, create a free login, okay? And then you go to, you can click on the student logo here, TradingView University. It'll take you to this page. Click on what you need to know and go to tradingview.com essentials, and we have some videos there for you to check out, okay? If you haven't created a TradingView account, you can click this chalkboard to receive up to $30 off your first TradingView plan. You click that chalkboard, and there's a code that you type in, or a link that I have because I'm an affiliate with them, and if you use that link you can get money off. Okay, you don't need a free account, but if you've never signed up for TradingView, you can take advantage of signing up through my link, because if you sign up on your own and then eventually you want to pay for a more advanced membership with them to get more ability, then it won't go through my affiliate unless you sign up with my affiliate link. Okay, so I would appreciate that. It's a way that you can support the school and what we're doing here for your benefit. And there's videos here on how to use TradingView for free. Now, it's only going to get you so far. All right, TradingView for free is only going to get you so far, because when you want to get to the higher levels, you're going to have to do multiple time frame analysis, and it's going to be a lot easier to have a upgraded account on TradingView. But just to start off and to get the basics under your wing, you don't need to pay for a TradingView. It's for free. All you need is one chart, and you can learn the basics. Okay? That's what I would do if I were you. I would use TradingView for free, learn the basics, get comfortable with what it is that we're doing, how we're doing it, and see if it works for you, because this type of strategy doesn't jive with everybody. Some people love support and resistance. Some people love bat patterns. But the way I look at it, no matter what trading strategy you use, you want to equip yourself with the knowledge of what we're sharing about how the banks are buying and selling, and how to locate these areas. And then you can put your bat patterns on top of these buying and selling areas. You can put your Fibonacci retracements on top of these buying and selling areas, if that's what floats your boat. All right. Great. So enjoy the rest of your day. Again, happy Thanksgiving, and we'll talk to you soon. All right. Take care, everybody.